Today we are continuing our session which we have conducted on 13th June, Risk Assessment and Internal Control Evaluation, and faculty is same CA Roshan Bajaj ji, and I think I have introduced, he is having vast experience in auditing, 20 years auditing, 20 years experience in auditing subject, and you all are knowing that this is very important and crucial topic as we walk in not to blame but to share but to see where processes thin and exposure run free. Inherent risk first, then control in line, residual left is where we draw the sign. Materiality guides what we test and trust because assurance means little if the wrong things rust, right? So not taking much of the time because sir has to explain in much more detail the topic risk assessment and internal control. And as we requested you, please come having thorough study, theoretical concept, essay 300 series you have to cover, and so that thereafter if you have if you have viewed the session carefully, you have prepared your notes, you can definitely ask your queries in the beginning itself or maybe in between. So sir is continuing the session and he'll be covering all those procedures because paucity of time we could not cover in much detail. So where we left, we request sir to please provide a small recap and important concepts, and definitely session has to be carried forward as risk assessment and internal control evaluation is very, very important topic. So over to you, Roshan sir.
One thing important, Karuna madam.
Yeah.
We have to realign the session that is on 27th. And
yes. Dear students, as I already informed you on 13 June session also, that we are having our session on 27 June, which we want to realign to 29th of June due to some issues. So we want you to confirm your availability and ease so that we can reschedule it. So please do share your observation on postponing the 27 June to 29 June. This session is on substantive testing, right? So whatever your observation is there, in the previous session, we have noted the feedback of the student. Almost all were agreed to reschedule the same. If you have any feedback, please do share. If you are in agreement, you need not to write. If you have any issue, then you need to share your feedback on the same so that formally we can announce at the end of the session that yes, it is being rescheduled to 29 June or not, right? So your feedback is important as already announced on 13 June, and today also we are requesting you to provide your feedback for the same. Okay, so we are proceeding with the session. In the meantime, you may share your queries, you may share your feedback. Over to you, Roshan sir. Thank you.
So thank you so much, Karuna ma'am. You have already set the context of this session. And I hope that, thank you very much, Rajiv sir as well, and the tech team, and most importantly, the board of studies and the students who are attending this session. Last day, 13th, we had discussed a lot of concepts on risk assessment and internal control evaluation. And hopefully all the students who are present today were there on 13th as well. So even if any of you people was not there on 13th, then I will be just running you through last session, what we discussed during the last session. So those things we'll be discussing now, and probably that will give you a at least a helicopter view, if not a detailed view of the aspects which we had discussed in the last session. And I would also request each of you, since who had attended the last session, in case you have any queries, please feel free to ask your queries. You can put your queries in the chat box, and Karuna ma'am can support me in providing me your queries. Then I will be responding to each one of your queries. And secondly, I will also, today our major perspective will be to cover the practical aspects of it. In the last session, we had already discussed all the concepts, majorly risk assessment as well as corresponding internal controls. Everything we had discussed in the last session. But today what we will do, during the last session also I tried to cover few practical aspects of it. I tried to cover few of the items. But today what we will do, we will discuss each and every practical document one by one and in detail. And in case you have any queries on that also, feel free to ask. So I will address all your queries to the best possible manner. Okay. Now
Definitely,
let me
Roshan
just,
sir. As and when we will receive the query, we will share it to you.
sure, please,
Yeah.
please.
Yeah.
Yeah, okay. So now let me share the last day's presentation. I'll just run you through fastly. Just hold on. Allow me a minute. 1 minute. Hope my
Yes, sir.
screen
It
is
is
visible.
visible. Yeah.
Yes.
Yeah. It is visible, sir.
Thank you. So last day we had discussed about risk, because we discussed that in our life also we have lot many risks, whether we ride a bike, we ride a bicycle, we get married, everywhere there is a risk, right? And correspondingly, even in audit is a journey which starts from audit acceptance and it ends at the archival of audit file, and before that definitely when we issue audit report. So that journey ends there. So throughout this journey, there are lot of risks which we need to address as auditors. So when we talk about risk from audit perspective, we mean risk of material misstatement. In the last session, we discussed that what is risk. Risk is bifurcated into three parts. One is inherent risk, one is control risk, and one is detection risk. So these three are the major risks. Just to reiterate on that, inherent risk refers to those risks which are there when there are no controls present. So that is something that is beyond our control. We cannot control those risks. Even, and those risks may be at industry level risk also, and the entity level risk also. Those are inherent risk. There may be a risk of management override of control. So definitely, since there is a concern of management override of control, so that is an inherent risk in the entity, which we will have to consider. And in that situation, that scenario only, we will have to do the audit. So inherent risk is that risk which is without having any controls. Whatever risk is existing there, that exists there, that is called inherent risk. Now coming to what is control risk. Control risk is something which is which is basically exercised by the management through implementation of policies and procedures. So they will definitely, in any business there are business risks. So those business risks have to be addressed by having controls against those risks. So it's up to the management how robust their controls are, how they are exercising their controls, how they are monitoring their controls. So that is something which relates to the management. So that also we need to understand as auditors, that how robust are the processes implemented by the management are. Whether internal controls are robust or not, that has to be assessed by us as auditors. Now the last leg of it, that is detection risk. Detection risk is the residual risk basically. So based on our assessment of the inherent risk and the internal and the controls risk, whatever our assessment, the result of the assessment is, based on that we devise our procedures. Based on that we decide on the nature, timing, and extent of our procedures, NTE of our procedures. You must have read it in your audit subject as well. So we need to decide on the nature, timing, and extent of our audit procedures based on our assessment of inherent risk and control risk. If inherent risk and control risks are high, so there is a high probability that we may face challenges while doing audit. And how we are addressing those, we will have to have those extended audit procedures to cover that. If controls are strong and inherent risk are less, so in that case, we can resort to even minimum sampling as well. because controls are robust and we have ensured that through controls testing. So this is about what we discussed about risk. Now the second term which comes in risk of material misstatement is material. We talked about what we mean by material. Material is something which can influence the economic decisions of the users of financial statements, whether it be a shareholder, whether it be a creditor, whether it be a lender. So whoever is affected by those financial statements, whoever is the stakeholder in that financial statement, so those, if any economic decisions of those users of financial statement is impacted, so that item may be considered as material. It's not necessary that every material item has to be quantified in numbers. It may be a qualitative item as well. Say, for example, there are certain incomplete disclosures or or maybe non-disclosure. Even that can be material. So that we mean by material. And as auditors, how do we determine that whether an item is a material item or not? So for that, definitely our understanding of the entity and the industry matters. But apart from that, we do compute a materiality figure that we will cover in the subsequent slide. I will just run you through that. So
Yeah,
material,
Roshan ji,
yeah,
one big query we have received from Bindu.
okay,
So I'm reading full, but then we need to answer step by step. First is
yeah,
Bindu is asking, could you please help in understanding the interrelationship between inherent risk, control risk, detection risk with the help of real-time audit example? So
okay,
that concept become clear with the application.
okay,
Her
okay.
second query
Wonderful.
is when ROMM, risk of material misstatement, is low at financial statement level, how and what would an audit strategize and plan? Can you please provide an example to make this clear? While auditing, third question.
Second query,
Yeah.
last leg, can you just repeat once?
Yeah. When ROMM is low at financial statement level, how and what would an auditor strategize and plan?
Okay.
Third query is while auditing a new entity previously audited by another auditor, should we retest the effectiveness of internal controls or can we rely on previous report? A. When does a need arise to retest the internal control of the entity? B. Would not be retest of controls increase the scope, nature, and timing of audit? How to incorporate or deal with that?
Okay.
So let's start with first one.
Yeah.
We need
So
to help her, means interrelationship they want to understand
yes,
between all three
I have
risks
noted
with the
down. I have
help of
noted down all the
real-time
queries.
audit example. Yes, sir. Yes, sir.
Yeah, I have noted down all the examples. So one by one, I will respond to it. In case
No
any
issue.
confusion is there in any of the questions, I will just ask you again. So first of
Okay,
all, I would like
okay.
to congratulate Bindu for asking such relevant questions, which are actually important to be understood. So congratulations to you on that. And all are very, very valid queries. And each of these queries need a real understanding to be able to comprehend that. So thank you for that, for asking these queries. Now coming to your queries, one by one, I will be responding to each one of your queries. The first query, which relates to that the interrelationship between inherent risk, control risk, and detection risk. So it is highly interrelated. How? Let me take an example. Say, for example, a company is having significant exposure on investments. Its investment includes, say, listed shares, also quoted shares. Its investment includes unlisted shares, and its investment also includes investment in its subsidiaries or joint ventures and associates. So it has a big exposure to investments. So in this particular case, what could be the inherent risk? Inherent risk could be, if we talk about the industry level, there may be a risk that market conditions definitely may affect. So market conditions maybe say, for example, now we are in turbulent times, and we are seeing the war between Ukraine and Russia, and here US and Iran, and Israel and Iran. So these turbulent times definitely call for certain risks, right? And so wherever my investments are, say for example, some of those investments are there in the countries which are affected. Maybe we are having investments in Dubai also. I have a subsidiary in Dubai. So what will happen? There is an inherent risk that due to war, the the uh, uh, the valuation of those investments will get impacted for sure, because I have investments there, and that country itself is at risk of this war. Then definitely there is a risk which is attached to it. Now this could be one industry level or global level, one inherent risk is there. Now coming to industry level risk in the same example, say I have certain investments in software companies, right? Then what is the risk? There may be a, this is an industry level risk that dollar prices may fluctuate, because I do export softwares. So dollar price may fluctuate. That is definitely an inherent risk which is beyond my control, right? Definitely against that, I may have control that I can hedge currencies. That is different aspect. But without controls, this is the inherent risk. And when we talk about inherent risk, that is without control, right? Second, now come to entity level risk. In entity level risk, since there are investment in unlisted companies also, there are investment in subsidiaries and joint ventures also, the company is in a very good position to impact the valuation of those investment, because those are not listed. So as auditors, it will be very difficult for us to identify the exact valuation of those investments, right? For that, definitely, as audit procedure, what we can do, we can invite valuation reports for unlisted companies, right? Those things can happen, but again there will be some risk that valuation itself is not right. So that can be an entity level risk, that these are the investments which are prone to certain risks. So these type of risks are inherent risks. So now we need to understand what is the interrelationship between inherent risk and control risk. Now there may be certain risks which are beyond our control, beyond the client's control. So there they cannot have any corresponding controls. Now coming to control risk, what happens? Control risk, they are business risks in the organization. In this particular example, there are certain risks associated with investments. Now we have corresponding controls for that. What are the corresponding controls? That we have uh, hedged our foreign currency fluctuation risk. Maybe we have an investment committee in place which monitors the position of the investments. We obtain valuation reports for unlisted companies. So all these aspects are covered as the controls which are being exercised by the management to cover these risks, right? So these are control risks. Now in the same example, when as an auditor, when I go, there may be two three situations. One situation may be that I perceive that the inherent risks are high, and even the control risks are quite high, because we could not see the if robust policies and procedures in the organization. So in that situation, what we will have to do, we will have to keep our detection risk at the acceptably low levels. How we will do that? That we can do through extended audit procedures. Then definitely as auditors, I will have to devise my procedures accordingly. Say for quoted shares, now we will have to profile that. For quoted shares, we do understand those are listed in the stock market, so I can definitely get its valuation from the stock market itself, and it is highly marketable, right? So to that extent, I do not see it as a big risk, right? But there may be still one risk, that there are certain long-term investment or current investments sitting in financial statements, which investments have actually deteriorated in value in the stock markets also, but that effect has not been taken in books of accounts. So definitely there may be a risk of impairment of investments. So that is one risk which we perceive, and accordingly we need to devise our process that we will be checking this aspect from the stock market prices, what is ongoing as on the closing date. Similarly, for unlisted shares, what I will do, for unlisted shares also, I will get the valuation reports. I will assess that whatever assumptions have been taken in the valuation report, whether those assumptions are in line with or aligned with the market conditions or not. Say, for example, the rate of return or IRR for present value, the discount rate which has been used in the valuation report, that discount rate is, say, for example, 15%. But we need to see how that 15% is arrived at. And in market, if I see that other valuations are being done where discount rate is considered as only 12%, but here they have considered 15% or maybe 9%. So in that case, we will definitely question the assumptions. So that will again form the part of our audit procedures, right? So this could be one example for interlinking all these three kind of risk. So this is the first situation. In other situations, say both the control risk and inherent risk is low. Control risk is low because the entity have robust processes in place. So in that particular case, what we will do, that our substantive procedures can be limited because controls are quite robust, so that we can focus on more analytical procedures rather than doing a lot of sample testing. So we can reduce our efforts and focus on more important areas in that case. So this is the interlinking. Hope I have been able to clarify your doubts on this. So should I move to the next query? Karuna ma'am? Hello? Hope I am
Yes, sir. Yes,
Yeah.
yes, you're audible. Sir.
So okay. So the hope this is clear. Now I'm moving to the
Yes.
next query which you asked.
Yes,
The next
sir.
query is the risk of material statement is low at financial statement level. So how auditor should strategize and plan his audit. So this was
Yeah.
the query, if I'm not wrong.
Right, right.
Okay. So in this case, what will happen, since the auditor has assessed that risk of material misstatement is low at financial statements level. So definitely the financial statements, we give our opinion on the financial statements that whether it reflects true and fair view of the affairs or not. And if we perceive that the risk of material misstatement is low at financial statement level, so definitely we have a kind of comfort on the controls of the organization, and maybe inherent risks are also quite low, that I can reduce my audit procedures. So now what will happen at financial statement level, there may be a possibility that the degree of risk amongst different items, say degree of risk in inventory is a bit higher, but degree of risk in investment is a bit lower. And likewise for other items, degree of risk may vary. So in that situation, what we can do, depending on the degree of risk, we can devise our procedures that how much time we need to spend on each of the area rather than planning for all the areas together. We will have to focus on individual areas. Individually, we will have to see what is the risk profile of this area. And accordingly, we will have to devise our procedures. Whether we can rely more on the analytical process, definitely it will be a combination of analytical procedures and substantive procedures. But still we can see that what that combination may be, my 80% comfort I'm drawing from analytical process and 20% from substantive procedures, that will reduce my time. And there may be situations where I will have to spend more time on substantive procedures, mostly in case of sampling. So on sampling, I am spending more time rather than analytical procedures, right? So it all depends. Accordingly, we will devise our procedures. And for that, as we discussed in the last session also, that we will classify the risk, which is a significant risk item and which is other risk item. And we will have to ensure that we address the significant risk in a focused manner. And other risk, accordingly, we can reduce our procedures to obtain a fair comfort on that. So this is the way through which the auditor can strategize and plan his audit. So hope the second query is also addressed. Now coming to the third query, which talks about if it's a new entity, whether we can rely on the audit procedures of the previous auditor or not, because previous auditors have also we can presume that the previous auditors can have also issued an internal financial controls report, and there are no qualifications we could see. So definitely they must have gone through the controls also. So see, previous auditor working, that we can rely upon definitely for the comparative years figures. But when it comes to current year affairs and the financial figures, so definitely we own that risk. If we are new auditors, in fact, in the first year, based on my practical experience, I am saying that we need to spend more time. What happens? Say, for example, we have been appointed as new auditors in the current year. The first and foremost thing what we will do is we will interact with the previous auditor once. We will understand what are the major perceived risks which he had come across earlier. Maybe he will give some inputs, he may not give certain inputs. So definitely whatever inputs we are getting, so we will consider that in our audit. So those inputs we will have to obtain. Definitely those inputs have to be corroborated with the facts, undoubtedly. So we will take those inputs, obtain those inputs, we will inquire from the previous auditor and obtain those inputs from them. We will definitely understand the reason why they had to resign. Are there any major issues in the organization? Those things we need to understand from them. And anyways, we will have to obtain the no objection certificate from them as well. Then only we have been appointed as auditors. Now, this was the first leg. Now, as new auditors, understanding of the business, understanding of the industry needs huge effort from our end. And I'm telling you, in the first year, 60% of the time goes into understanding of the entity industry processes uh, and basically the gathering and to identify the risks and to assess the corresponding controls, the planning portion. In the planning portion itself, we spend 60% of the time because that is our first year and practically it is done. But subsequently, how much time we allocate to planning and other activities, that is close to 30 to 40%. And most of the time we devote on executing the work. But in the first year, in fact, it is vice versa, and efforts increase in the first year. So even if previous auditor has gone through and had cleared all the controls, there are no control issues, no major controls are lacking, but still as new auditors we will have to ensure that the financial statements reflect true and fair view, the controls are in place, and they are compliant with whatever is there in Caro report. So as auditors, we will have to ensure everything. We cannot rely on the previous auditor in that respect. Hope I am clear on this point as well. Right? Okay. Now coming to the last point. Ma'am, one more point was there. So I have written here, but it is not very clear to me. Can you just repeat it once?
So you can check in your chat box also.
Okay, I can
You
check
want.
in chat box. 1 minute.
Yeah.
Give me a moment.
जब बोलना तो फोकस इधर करके
Just a minute. Yes. So I think 3 queries only are there. Would retest of controls? Yes, we will have to retest. So I have covered all 3, I think. Yes. So hope it is clear now. Should I proceed?
Yes, sir. There is one more query. I'm sharing
Yes.
it with you.
Yes, you can share on the chat box. I'll just go through it. Okay, sir, as the auditor only test materiality on sample basis, it test materiality on sample with lot many auditors taking the advantage of it and conducting the audit in negligent manner. Stating auditors will only give true and fair, not true and correct opinion. Can we say it? This is a limitation, sir. See, I'm telling you one thing, you need to understand the practicality of it. What happens? There is a team of 10 people, 12 people, 20 people accounts team in the organization, and they are working all year round to prepare those accounts and financial statements. But we as auditors go there for say 20 days, 1 month, 1.5 months, 2 months, whatever, depending on the size of the entity. So in that period, we have to cover every aspect. We need to understand the entity also. We need to do planning also, right? And accordingly, we need to do the execution part and finally the reporting part. So all this, completing all this within a span of 25, 30, 35 days, it is practically impossible for us to cover everything, to cover 100% of the population. It is impossible. That is the reason, that is the premise behind the fact that why we are saying true and fair view. We cannot give absolute assurance, because see, if someone wants to commit fraud, it's not easy to identify that fraud. If it was so easy to identify a fraud, then organization must be having some those controls in place to identify those, but they are also not able to. And if people start expecting from us that in a span of 25, 30, 35 days we are able to identify everything, that is quite impossible, let me tell you. So having this expectation itself is wrong. And in my view, definitely the kind of basically literature which is there, where we compute materiality also and we give true and fair view, that has been decided based on lot of inputs from lot of experts depending on the requirement, right? So saying that it is a limitation, I may not agree to it. Yes, it is a limitation that we are doing sampling. It is a limitation, but still we are trying to do representative sampling. We try to use the methodology which best reflects the samples, the population. We do analytical testing. So from our perspective, we try to exercise all kind of controls through application of standards on auditing. But definitely, since we are not testing 100% of population, and even though if we have tested 100% of population, still we will not be able to give absolute assurance on the financial statements, right? So considering all this, in my view, definitely we cannot say that we are not doing our duties as auditors. If we have done good audit, if we have complied with all the standards on auditing and the other relevant standards, then definitely we have done our job. But the key is, it's everything what we have done should be documented. No documentation done, no audit done. It is as simple as that. Documentation is the only thing which can save us when we have to, if someone challenges us. That is the only thing that can save us. Hope the query is clear now. So since ma'am, any more queries or should I proceed?
Yes, sir. Sir, yes, you can proceed.
Yeah, okay. So let me reshare the slide. 1 minute. Just a minute. Just a moment, please. 1 minute. Yeah. Okay. So this we have already discussed. Inherent risk, control risk, detection risk. This I have already covered. Examples: inventory overvaluation. So misstatement can be on both sides. It can be overstated. It can be understated. So both are misstatement, whether it relates to inventory or related party revenue. So all these we had discussed in the last session. All these examples. Risk assessment process: we understand the entity, we identify the inherent risks, we identify control risk, and then accordingly we devise the procedures. This also we have discussed at length. Few examples we had discussed. Then internal controls are there which addresses the business risks, the audit risk from auditor's perspective. So the internal controls are those processes and activities which addresses the risks, which safeguards us. Then components of internal control we had discussed. Control environment. Control environment refers to the tone at the top. how the management is operating. And risk assessment, we already discussed how do we assess risks. Control activities, we have discussed already that every risk should be backed by a corresponding control. And that control is called a control activity. IT, so definitely information system plays a pivotal role. Then monitoring of controls, then definitely there should be a mechanism, maybe through an internal audit function or something. The controls has to be monitored, whether those have been implemented adequately and whether those are operating effectively or not. How to evaluate internal control? This we had discussed that the first step should be that we assess the design of the control and its effectiveness. Then we try to identify the control deficiencies, and accordingly we see whether the controls are effectively operating or not. These were the standards on auditing, which we discussed in the last session. So I'm not getting into it in detail. So this we had covered already. Now, yeah, materiality also we covered. How do we compute? What is the difference between materiality, performance materiality? Basically, performance materiality provides you a cushion over the materiality. How do we compute materiality? We identify a proper benchmark. It can be revenue, can be a benchmark, profit before tax can be a benchmark, or any other important factor which matters the most to the investors and which is the most consistent factor in the financial statements of a company. So that we consider as a benchmark, and over that benchmark we can compute a certain percentage, maybe 1%, 2% of revenue, 5% of PBT, based on the judgment of the auditor. That becomes your overall materiality. And from that overall materiality, if we are providing a cushion to it, then that cushion is provided through performance materiality. So performance materiality may be 75% or 50% or 60% as assessed by the auditor based on his judgment. So that could be performance materiality. And then we discussed about how do we use materiality for sampling and all. We do use materiality. This we already discussed. Benchmark we discussed now again. Then I think major aspects have been covered. Internal control system, this also we had discussed. Because why I am just running through it, because we will have to go through the practical aspects of it in detail today. So these all we had covered already, so no need to go through it again. So their business cycles, we need to understand what are business cycles. Like order to cash may be a business cycle, procurement to payment may be another business cycle. So first and foremost, as part of our process understanding of the organization, we need to understand which are the most critical business cycles in the organization. And those processes we will have to understand in detail as part of our process understanding. And within those processes, we have to identify the risks which are there, which are the audit risk, and what are the corresponding controls associated to that. That assessment needs to be done. Okay. Then RCM, today we will see it in detail. What do we mean by risk control matrix? In last session also I showed one example to you, but today we will discuss it in detail. Today what we will do, I will take you through one procurement to payment, the whole process. Last time I had shown a glimpse of it to you, but today we will discuss it in detail so that you get a fair idea about how does it work. Then controls testing also I will show to you, and this case study which was left in the last session, this also we will try to cover after I have shown you the practical procurement to payment process from end to end. So now coming to the practical side of it, any further queries you may ask now, or I will move to the practical side of it. Just allow me a moment. Hope no further queries are there, ma'am.
No, sir.
Okay.
There are no questions.
Thank you. Thank you. Okay. Now I will show you one very interesting thing. I'll show you, then I'll move to other things. Yeah. So this has been prepared for one of our clients. So this particular document I'll be not sharing with you. I'm just showing it to you for your knowledge purpose. So here, if you see, yesterday we discussed about an understanding document. How do we understand the process? Say, for example, this particular, I will take you through procurement and payment cycle separately, but this particular document is quite interesting. That is why I wanted you to see this. So this relates to recruitment and HR operations and payroll. This relates to the business cycle, hire to retire. So how do we understand that what is the process which is there in the organization? Okay. Now coming to the source. There are 5 fields which are most relevant in this. One is source. Source refers to what is the source of a particular input. For example, if you are seeing here hiring manager. So hiring manager is a person for this particular input requirement of candidates as per job description. This is for this particular input, the source is the hiring manager. So what hiring manager will do? He will give an input requirement of candidates as per job description. So how many candidates will be required? And he also gives the JD, job description, that what will be the roles and responsibilities of the candidate. Then when this input is there, what process is done on this? The process is hiring manager identifies the need of resources as per the job description and communicates their requirements to the controlling team. So what hiring manager is doing here, he is identifying the need of resources and for what job role those resources are required. And based on his assessment, he is communicating that to the controlling team. Then based on this process, after doing this process, this particular activity process is nothing but a set of activities. So this particular item, hiring manager identifies the need of resources. This particular item is an activity. So after this activity is done, what is its output? The output is request to create an employee requisition. So one employee requisition is being generated after this activity has been done. And who is the consumer of this requisition? This is going to the controlling team. So controlling team becomes the consumer of this output. And then if you come to the next row, the controlling team becomes the source in the next step. So now controlling team is the source. And what is the input which they are getting, which they are having? Request to create an APR. So basically this output in the first step, that becomes the input in the next step. Then again on this input, using this input, what controlling team is doing? Their job requirement comes from the hiring manager. Controlling team creates an APR marking the hiring manager to be sent to the recruitment team based on the job description. In case internal job rotation, 6 levels of approvals are required. Who all have to approve? Hiring manager, local controller, global controller, global segment head. So this is the process which they are following. And in case external recruitment approvals are required, this is the steps. So there are 2 types. One is internal job rotation. If an internal employee is shifted from one operations to another operation, the process is different. Approval mechanism is different. And if an external hiring is to be done, the process is different. So this is the process which is being done by the controlling team on the input which they have received from the hiring manager. Now, based on this input, what output he has created? He has created an employee requisition through Smart Recruiter. They have a system in place through which they have created this APR. on the system they have created the requisition, having a reference number where all the details will be there, whatever details are given here. The job description, everything will be there. And to whom it goes to the recruitment team, that now you can go ahead and recruit the person. Now in the next step again, similarly, if you see, the recruitment team becomes the source in the next step. And what they are doing, the EPR having a reference number is the input for them. And what process they are doing, the JD is posted in the location news where all the existing employees can see the post. So they have a portal where they will post that, where every existing employee can see that this position is open. Executive and senior positions are not posted in the location news portal because that is quite confidential data, confidential information. So they do not post executive and senior positions detail there. And email is also sent to all the existing employees. So email is also sent for that requisition to all the existing employees. For senior level, talent management, organization development, and HR software, they have sends the go ahead as per the past tracker of the employee. And for senior positions, the employee must have served in the company for at least 24 months. So he must be understanding the culture of the organization. He must be there for at least 2 years to be internally elevated for senior positions. Now, based on this, after this activity, what is the output? They get the CVs. Those CVs are then forwarded to the hiring team. So then in the next step, hiring team becomes the source. Then for them, the input is the CVs, which has been provided to them by the recruitment team. Now, the process, what process they are doing? Hiring team shortlists the profile and schedule the interview. Then interview is conducted at 4 different levels, L1, L2, manager and HR rounds. So 4 rounds of interviews are done. Then finally the output is list of selected candidates and the onboarding team, it is forwarded to the onboarding team. So then now the activity of onboarding team starts. So list of selected candidates they have got, the onboarding process starts, and they have created the since already the person has been identified and being employed. So their employee ID is created, their master data is created in the system. So here master data is the output, and that is informed to the operations team. And throughout this process, if you see other columns here, one lead time is there, that how much time each activity takes. So why this lead time is required? To understand that, to fix up the accountability of each department or each person, that this is your TAT. You will have to complete this activity within this timeline. If any time lag is there, the whole operation may get affected. If any observations are there, those are captured here. And if any recommendations are here, so recommendations also may be given. So this is one typical example how we can understand the process in detail, identifying the documents being generated in the system, in what frequency those activities are happening, what is the lead time involved in that, are there any control gaps, and do we have any recommendations to give. So everything is captured within one document, and this document does not look very lengthy also. It's a very simple document. So for each significant process, we should have an understanding document, which even if in this year maybe I have sent A and B for this audit, in the next year I may send D and E for that audit. So that should not create a gap in the understanding. For that, this document is very important. So hope everyone is able to understand this document. And now I am moving to other practical documents which I would like to show you. In this, anyone is having query can ask, please. I am closing this document now. Let me share the document now. Okay. Yesterday we saw many documents, but today we will go through the procurement to payment process end to end. How do we do audit of that when it comes to risk assessment and internal control evaluation, how we do that. So it starts with similar to what we saw in the previous document relating to hire to retire. So here we have prepared a similar document for procurement to payment process. So in this particular, so this see, there may be certain fields which have not been updated in this document. So that is not a problem. What you need to understand here is the concept of a document, why it is prepared, what is prepared, when it is prepared, and by whom it is prepared, and by whom it has to be reviewed. So all those things we need to understand. Now, coming to the payment to procurement to payment process. Now we will start from the scratch. How do we start the risk assessment process? So first we are doing the understanding part of it. So the first activity, if you are able to see this sheet, I'll just zoom in a bit for better visibility. Now, see here the first source is the user department. So basically user department is raising an indent, a requisition that I need this particular item for my operations. So the user department has issued an indent. So here input is the indent. What is the process which he does? Individual departments, after identifying any requirement of a material issue, issues an indent via document software. So they have a document software they have in place through which requirements have to be raised. So these requirements may be raised manually also, and wherever there are systems in place, so through system also this requirement can be raised. In this particular case, what is the output? Unapproved indent, because it has not been approved yet by the departmental head. So who is the consumer? This indent here, one leg is missing here actually. So let me just complete that leg. This unapproved indent will go to the HOD of the user department. That aspect has not been covered here. It will go to the HOD of the user department for approval, because he is the person who is responsible, who is accountable for the doings and misdoings of his department. Right? So this unapproved indent, this particular output will first go to the HOD. So consumer will be the HOD, user department. Then in the next step, HOD will be the source, and then he will approve the indent after his review. So then finally, what will go to the storage department is the approved indent, which has been approved by the HOD. Now what storage department, now in the next step, once it has been sent to the storage department, what storage department will do? The storage department then updates the stored data in the document software, that is the stock of the required item in the stores. So what he will do, what he is doing, he will first update that how much of that stock is lying in the stores as of now. So whether it is fulfilling the requirement of the user department or not immediately. If yes, he may go ahead and issue it. If no, then he will have to order it from outside. Right? So here the output will be, here this step has been actually misstated here. It will be approved and updated and approved indent will be the output. Then user department will not come into picture here. So these three steps, I think that these have been mingled. So please understand the concept, what I am saying. Okay. So basically this unapproved indent will be approved by the HOD. Then HOD will give that indent to the stores department. Stores department will update the stock, whether this particular stock is available or not. If it is available, then we are moving to the next step. Now, then stores department will send this requirement. See, this particular case is also a factual case, but this is not a standard process. This is for an organization who are having this process that a requirement is, once requirement is raised and approved, it is again going to user department. But here definitely there is a gap. This shouldn't be the process. Generally, the process should be user department issues an indent, HOD will approve it, it will go to the stores, stores will check the stock, whether it is there in the stock or not. If not, then they will raise a requisition to the purchase department that this item has to be procured. Now, coming to the purchase department, we are coming to row number 6. So here the input is approved indent or requisition, you may say. Purchase department then selects vendor based on past experience, availability of materials, price or urgency, and then prepares a purchase order. So what purchase department will do, they usually have an approved vendor list. From that approved vendor list for that particular item, they will send quotations to the parties, request for quotations to the parties. They will be sending, either it can be done through mails also, either it can be done through calls also, whatever be the process in the organization. So once they have sent the request for quotations, parties will send the quotations to the company, to the purchasing department. So what they do, those quotations will then be compiled at one place and a comparative statement is prepared that which particular party is providing the material at the most competitive rate. Definitely, of course, we'll have to see whether he is complying with the specification requirement or not. The first and foremost is that whether he is complying with the delivery requirements. Maybe we require this delivery within 5 days, but they are committing to deliver maybe after 15 days. Then that will not be suffice for me. So in that case, first we need to see whether they are matching our expectations or not in terms of specifications and delivery. Then we move on to compare the prices and the credit period which is being allowed by the party to us. So based on that comparative statement, they identify which is the best party to whom this order can be placed. And whichever party is identified, that party is issued a purchase order, which is there in this step. So now the output is purchase order. This is sent to the vendors. So here the consumer in this purchase order is the vendor. Now what vendor will do, after any negotiation with the vendors, the order is confirmed by the vendor. The vendor then prepares the necessary documents like invoice, packing list, e-way bill, or any challan. So these are the supporting documents which may be there along with the invoice. It may be a packing list, it may be an e-way bill, or any challans may be there, transporter challans, delivery challans may be there. So all those documents will come along with the invoice and goods to the premises of the company. So once invoice and challan has been received, so this is the output of the vendor. They are sending the materials along with invoice and other supporting documents. Then ultimately this material reaches our main gate. In this particular case, we may consider that it is a plant area. So in the plant area main gate, we have received this material. Now what main gate will do? So since this particular company deals with husk coal, deals with production of starch. So in this case, husk, coal, maize, consumables and civil, these may be the items for which separate registers are being maintained at the main gate. What they are saying, that truck enters the plant with a valid invoice or challan. Security will verify the trucks by checking the goods against the invoice, that whatever goods are mentioned in the invoice, whether those goods are there in the truck or not. So that is a prima facie look at the goods. Then after verification, a unique gate pass is issued with a copy retained at the security gate. Then one gate pass is issued by the security gate to the transporter that you can carry this gate pass, and once you return, then you will have to return this gate pass to us. So that one gate pass is issued accordingly with a copy which is retained at the security gate. Now the security gate records details like what details they are recording: supplier, who is the supplier, what is the vehicle number, what is the phone number of the driver, what is the item there, what is its in time. All those details and many other details are recorded there. Then what is the main gate's output, the security gate output, that is updated register. They have updated the registers and they have issued a gate pass. Now gate pass inward, which has been issued by the security, that becomes an input, and details like unique gate pass number, date, vendor's name, POs, these details are mentioned in the gate pass also. And then output is updated gate pass inward. Now coming to the next step. So this is a typical process which is there in an organization. Definitely we can come out with gaps in this. Like if you see in this particular case, you can see an observation that there is no need of PO number and date at the entry, gate pass inward level, and same remains unfilled too. So basically we have seen that there are certain fields which are not being filled by the company, and those are not required also at the gate level. So those details are not required. So this is the observation that they can implement to improve. Now coming to next area, once the material has entered the gate, now it reaches the weigh bridge where the goods are weighed. After the security records the required detail, the truck then passes to the weigh bridge and the gross weight is recorded. So since the truck is loaded now, so with the loaded weight itself, the truck is being weighed at the weigh bridge. In Hindi we call it dharm kata also. So there we are weighing the goods. The operator enters details like supplier name, location. So all those details which are there, which weigh bridge operator is looking at. So those details are being captured by him. So based on that, several registers are being updated by him. And then finally here in this case, registers and payment slip becomes the output. Now again, once the goods have been weighed, then ultimately those goods will go to the stores department, because stores is the department which will manage the stock. So it will go to the stores department, and now the goods then enter the store area and goods are unloaded. Now goods are being unloaded. Here goods have been unloaded, and after unloading, so here one more step is missing. What step is missing? So once the goods can be only unloaded when the inspection department has actually inspected the goods, that whether it matches with the specifications which have been ordered by us. If it is matching here it is written also, which are first inspected then unloaded. So this is being inspected by the inspection department, and once they clear that okay, the goods matches the specification, then only the goods are unloaded. Now once the goods have been unloaded from the truck, what will happen? The truck will come back empty to the weigh bridge. Excuse me. Earlier what we had done, we had taken the gross weight of the vehicle along with when it was loaded, the goods also were there in the vehicle. Now we will do the net weight of the vehicle. We will take the tare weight of the vehicle. So what is the tare weight? Why it is important? Since we have to arrive at a figure that what is the net weight which has been unloaded. So what we will do, gross weight minus the tare weight. We will arrive at the net weights. Okay, this is the quantity of goods which has been received by us. In case there is any shortage, that will be intimated to the vendor, and if needed, then we will raise a debit note on the vendor. If the quantity is more, definitely there is a tolerance limit on the both sides. Maybe 1% is the tolerance limit. If the quantity of goods vary till 1%, there will be no debit note or credit note. But if it goes beyond that, then definitely debit note, credit note comes into picture. Now coming to the next step, the stores department verifies the final quantity and issues gate out pass. The truck comes back to the main gate. and then security checks the gate pass details, and then they will release the vehicle. Okay. Now, once the store is in possession of the goods, they will get in touch with the user department. They will issue the goods to the user department because they already had indent in place. So they will issue the goods to the user department. User department will, again, definitely they will have a look at the goods, whether those match with the specifications or not. Then accordingly, goods can be accepted. And many a times what happens, maybe there are certain items which have not been inspected at the gate level before unloading at the stores. Especially the civil items, say for example cement, sand, those items are directly sent to the user department rather than storing those with the stores department. Why? Because unnecessary transportation costs are involved then for transporting goods within the premises. So in that case, what will happen? That stores may not have that sufficient control, inspection department may not have inspected the goods. So after receipt also, many a times it may happen that goods may be rejected. If that is the case, then the rejection process comes into picture. And based on that, different MIS are prepared, tracker sheet is prepared here of bills received, GRNs raised, and whether how that has been accounted for in the accounting software. So all those processes are being captured here. So this is a typical understanding document where we are capturing the source of an information, we are capturing the input data, we are capturing how that input has been processed and what output has been generated and who is consuming that output and what next step that consumer is doing on that. And in the whole process, we come out with observations that these are the control risks or there are certain controls which are not adequate. So those controls we discuss, those control gaps we discuss with the management, invite their inputs on that. And if at all we are convinced, we do not consider it as a significant gap, but there might be a possibility that we may come across certain gaps which are quite significant, control lacunas. Then we need to assess that, okay, in this particular case, I have to extend my substantive audit procedures because controls are lacking here. So accordingly, we will devise our substantive audit procedures. So this is about the understanding document. Now I'm moving to, this is a similar document. Whatever process we discussed through SIPOC, that is source, input, process, output, and consumer, similar process can be captured through a flowchart. So why we create both of these? The reason being, going through a flowchart does not take much time, but going through a narrative process may take time. So generally what we do, even if you are preparing a SIPOC chart, that would also suffice. But if you want, you can prepare a flowchart also for understanding of the process. Now coming to the risk control metrics related to this process, procurement to payment. So what till now, any queries, Karuna ma'am? Any further queries are there, ma'am?
Yes, sir. Yes, Roshan ji. We have received. Student is asking, is using Copilot in MS Excel for doing reconciliation or any such task purpose on client data is right. Then since Copilot use internet, will it not be breaching our professional ethics in terms of letting confidentiality be lost?
See, you would agree that practically what we see, the auditors, I'm not talking about the large auditors and the firms are quite which are quite organized. So I'm not talking about those firms. So there are many firms, small firms and mid-sized firms, which are using the pirated version of MS Office or other tools for that matter. They do not use the uh, the licensed version of it. Maybe from the perspective of cost, right? So in those cases, if at all we are using certain tools where we are basically sharing certain details of clients which may be indirectly shared with the external world, so that is definitely a confidentiality issue. Now, there might be a possibility that an auditor is using a licensed version which is within their control, and in all the AI tools, I have not used much of Copilot, but I have used Claude and other AI tools. So in those cases, what happens? There is an option to select the confidentiality mode, that this data will not be shared with the AI tools to be used for further improvement of the that AI tool. My data will not be shared for training the AI tool. So that option is there. It is there in ChatGPT also. It is there in Claude also, and any other AI tool. So we can switch it off so that whatever data we are sharing with the AI, so that data remains within our control. It does not, it cannot be used by the AI providing company also to train its other AI models. So those controls should be in place when we are using any of these tools. We should ideally use the licensed version, and also we should switch off the AI training models option, that we have to switch off. Otherwise, definitely we are putting client data at risk. So these things are part of the internal IT general controls which we should exercise. And definitely a lot of awareness issues are there, a lot of awareness gaps are there as of now, but people are definitely learning. If you just look back 1 year, then you will see that not many of us were using ChatGPT or Claude or other AI tools. But in the past 1 year, the situation has improved significantly on that front. People have started using it. Now, definitely, every facility comes with a risk. So now, how to cater to those risks also needs to be taken care of when we are using those tools. So again, that awareness also will be created, but it will definitely take some time. But yes, what you said is very right. If we are using any tools, we should ensure that confidentiality aspect is maintained, because this is the data which has been provided to us as auditors on confidentiality grounds. So we need to have controls in place to ensure that. Okay.
Sabindu is saying, thank you for explaining the P2P SIPOC process flow in detail. It really helped to connect with the process. But she is asking for missing goods, difference in quantity. What procedure we will do?
Okay. Again, a good question. So what happens, say for example, we have received short goods. Basically, we had to receive, say for example, 100 tons of material, but we have actually received 90 tons of material, right? This is one situation. The other situation may be that we had to receive 10 items together, but we have received 9 items only. So I think both the cases are covered here, missing items and short received items. So in these two cases, how we will have to comprehend this situation. So here what we will do, we will definitely compare the quantities with the invoice, and we have identified that certain items are missing or certain quantity is missing, right? Maybe that item is there, but quantity is short. In both the cases, we will have to immediately intimate to the purchase department that this is the discrepancy which we have observed, because purchase department is the one who is coordinating with the vendor. And to ensure segregation of duty, we do not allow stores person or accounts team to directly interact with the vendor for these matters, for quantity related matters or missing quantity matters, missing items matter. So this particular issue has to be flagged to the purchase department first. Immediately purchase department will speak to the vendor. The purchase department will provide all the necessary evidences to the vendor. And what happens when the transporter, after unloading the goods, comes out of the gate, then quantity is written over there. Okay, since you had to deliver 100 tons but you delivered 90 tons only, you had to deliver 10 items, you delivered only 9 items. So that confirmation and acknowledgement has to be given by the transporter also. Now, when the purchase department coordinates with the vendor, there may be two situations. The vendor may accept in coordination with the transporter that actually less goods have been delivered to the party. So with the vendor, two options are there. Either the vendor will absorb that loss, or maybe they have terms with the transporter to recover that cost from the transporter, whatever short goods have been unloaded. Maybe on the way, goods have been basically on the way, those have been unloaded somewhere which we are not aware of, right? So that is why the weight is lesser. So they can recover either from the transporter or they can absorb the loss. But for that particular thing, from our end, what we will do, we will raise a debit note on the party for short quantity or missing item. That debit note will be raised, and accordingly the vendor ledger will be adjusted with that amount, and only the balance amount will be paid to the vendor. So this is what we do when missing items or short items are received.
Yeah. One more query is there on the same. Kuldeep is asking. Second.
Yeah.
1 second. Sir, as procurement of material are subject to gate pass requirement at factory security gate, and security agency is usually outside independent party, then if auditor should check and rely on security gate pass data or not?
Yes, definitely. See, what is security? See, in any factory setup, I'm telling you practically what happens. Main gate is the heart of any plant or factory. That is the heart. Why? If something has entered the factory, which is not meant to be, maybe some illegal entries are there in respect of illegal material or illegal people with criminal background. So if those people enter the factory, that poses a significant risk to the factory. And if certain goods have gone outside the main gate without the proper authorization, so that also poses a significant risk to the organization. So in both the cases, whether it is gate inward or gate outward, both in both the cases, control should be very, very robust. So that is the reason why main gate is something which is the heart of the organization. Now, since main gate, what control organization is having on the main gate, they have deputed security personnel, maybe from an outsourced agency. But those people have been trained to become security people, right? These people get training from their agency which has deputed them on that job. Those are trained people. How to manage illegal entries, how to manage illegal material. So all those things they are aware of. How to protect the factory, how to protect the main gate of the factory. So they are aware of that. Now, what are records which are being maintained by the security, whether on a system or manual registers, that is a significant audit evidence for us. What happens if inside the factory the internal people connive to do something wrong. But there is always a possibility that security being an external agency, and every time, every 15, 20 days or a month, people gets changing. So that is definitely a control which we can use to see whether any of those things have actually happened. What may happen, say for example, from inside the factory, when dispatch has happened, while dispatching the goods, we have actually dispatched 101 tons of material while we had to dispatch only 100 tons of material. But when it goes to the payment, it will definitely show 101. When it goes to the security gate, security will match the payment slip with the invoice which has been raised by us. So that he will match that whether invoice is matching with the payment slip or not. And accordingly, that fact will be noted by the security gate in the register. So in this whole flow of events, main gate records play a significant role. And as auditors, definitely we should peruse those documents. Hope it is clear to you, Kuldeep.
Yes, now I think we can move forward because again we will be having paucity of time and we have to cover more.
Now we will be covering things really faster because concepts in terms of practicals also I have given very um, good concepts they have already got. Now what we will do, we will run through really fast and they will be able to understand the process really fast.
And
Okay.
one more, like students are asking for the PPT and these papers. So
Yes,
dear
yes.
students,
I've already shared it with you.
nahin, now onwards, you have to attend this and faculty will answer your queries one to one. These sessions will also not be available with you in the recorded form. So you have to attend at the same point of time and ask the doubts. So be with us in the sessions itself.
Okay. Okay, moving forward. So now coming to the risk control matrix, which we were talking about yesterday also. So here, yesterday we discussed about that we codify the controls. The process, every process will have a sub process. So here the main process is called procure to pay. The sub process under the procure to pay process is vendor selection. So here, who is the process owner? The raw material consumables purchase head manager, VP operations. These are all the process owners who are involved in the process of vendor selection. What is the control objective? To ensure adequate control over vendor selection process. Now, here, so these are the financial statement assertions. This as auditors we have put in here that this particular activity, this particular sub process and activity control objective, it is through this activity which all assertions we are trying to address. So here we are trying to address two assertions. One is completeness and one is existence and obligations. So existence is for assets and obligation is for liabilities. So these two items have been ticked here. Now, whether this poses any fraud risk, yes, vendor selection process may have fraud risk factors. So we have marked it as yes. And whenever we mark any activity having fraud risk factor, then we will have to consider it as a significant risk. Now, next item is COSO component. So this has been updated by the management because they are using the COSO framework. COSO is nothing but this is Committee of Sponsoring Organizations, which was formed long back for devising the internal control procedures, how to manage, how to exercise controls over an organization at management level and cascading down to other levels. So that is there in the COSO framework. So that they are using this COSO framework to manage their controls. So in COSO component, control activity is one of the components. We talked about certain components of COSO earlier in the slides where we discussed about control environment and all those. So those things are part of COSO component. So here we have identified that this particular activity is a control activity. Now, what is the risk here? Selection of incompetent or suboptimal vendor resulting in supply of substandard material or delay in supply of material. So 3-4 risks which we have been captured here. One is we have selected incompetent vendor who should not have been selected. That vendor has been selected. Or the vendor in past has provided us suboptimal quality of materials. But still we ended up giving the same party the order. Then delay in supply of material. So there have been past instances that a particular vendor has delayed the supply of material, which has impacted our operations also. And again, we are selecting the same vendor to supply the goods. So this is again another risk. And risk rating has been considered as high because it is always also a fraud risk factor. Now,
So
what
there
is
is
the
one query.
yeah?
Please explain how can auditor assess controls in newly implemented business processes where historical evidence is unavailable?
So I'm really happy that the kind of questions these students are asking. So many a times I take sessions for members also, but I do not see such questions coming from them many a times. So congratulations again to them for these kind of questions. Anyways, I will
Right,
explain
right.
this.
Yeah,
Yeah,
please.
I'll explain this. So what happens if the entity itself is new? So definitely there will be no precedent available with us for assessing the controls of the previous periods. But generally what happens, say the entity is operating for only 9 months. So in those 9 months also, they may have entered into certain transactions. They may be having certain balances. They may be having certain policies and procedures. So definitely there might be a possibility that they do not have any documented policies and procedures. But if an organization is running, definitely without processes, an organization cannot run. Maybe the only difference which may be there, that processes are not documented, those are not formal. There are informal processes which are in place. But without process, an operation cannot happen, right? So in that particular case, we will not be able to rely much on the controls testing because formal controls are not there. Controls have not been documented. Then control risk will be considered as very high in that case. Inherent risk, definitely we'll have to assess separately depending on the nature of the industry and the entity. But control risk will be very high. That will be assessed as very high. So what does it say? Then to bring our detection risk to the acceptably low level, we will have to extend our audit procedures beyond the normal sample size. So we will have to extend our audit procedures beyond that so as to reduce our audit risk, right? So in case of new entities where controls have not been documented and very less precedents are available there to assess the controls, then definitely we will have to consider control risk as high, and accordingly we will have to devise our audit procedures. Hope I'm clear to you.
Yeah,
Okay.
yeah. Please
Any other questions,
continue.
or should I move ahead?
No, you please continue.
Okay.
As and when I will. Meera is asking,
Sure,
how
sure.
do we identify these risks?
See, as I told in the previous session, if you do remember, that these this RCM preparation and compilation is the responsibility of the management. They usually have risk registers in place with corresponding controls mapped to it. But let me tell you practically that in mid-sized companies and the companies which are not very organized, these documents are missing. So in those cases, we will have to request to the management to identify risk and provide the corresponding controls. If at all they are not able to provide any such document to us, then as auditors, it is our responsibility to identify audit risk and the corresponding controls which are mitigating those risks. Now, your question that how do we identify this risk? As I said, that risk is identified at different levels. There may be certain risks which are industry level risk. There may be certain risks which are entity level risks. There may be certain risks which are process level risks. And there may be certain risks which are FS level risk, financial statement level risk. So all at all these levels, we will have to assess the financial statements, we will have to assess the industry, we will have to assess the entity to understand what all risks are there, what are the standard risks which are there, which are associated with this industry. Those risks we will have to capture, and based on our understanding of the entity and how it is operating, how is the control environment in the organization, based on that we identify the risk. And when it comes to process level risk, as I said, we will identify the key processes, we will get into the understanding of those processes, and then while understanding those processes, definitely take an example. Just we discussed some time back regarding procurement. In the understanding section, there we saw that vendor vendor selection was there. Even in this slide, this sheet also it is there that vendor selection is there. So there is always a risk that wrong vendor may be selected or preferred vendor is being onboarded. So that is always a possibility. So as experienced auditors, we should be able to identify risks which are associated with the process. Those risks we should be able to identify. And against those risks, then we try to assess what controls are there in the organization. Right? Okay. Now, in the first item, we will see that before what is the entity's control corresponding to the vendor selection process. Before adding any new vendor, following are ensured: obtaining vendor profile, request for proposal, quality specification, all these we have discussed. Certain parameters are converged regarding the raw materials and consumables to be purchased beforehand, geographical area, because that will affect my transportation cost. And for continuing vendor, past history is inspected periodically. Now, whether it is a key control or non-key control, last day also we discussed key controls are the controls which are directly addressing a particular risk, but there may be certain supplemental controls which are supporting the key control to address that risk. So it's not necessary that every risk will be supported only by one control. There may be two controls which are addressing one risk, and there may be two risks which are addressed by one control. It may be vice versa. The control may be automated also, it may be system driven, or it may be a manual control also, or it may be hybrid control also, where there is an element of automation and element of manual. A control may be a financial control or an operational control. It may be preventive, detective, corrective. It may be any such control. This also we discussed yesterday, what we mean by preventive control and what we mean by detective or corrective control. Then what is the frequency? We discussed that in what frequency this particular activity is happening in the organization. That frequency, whether it is a daily activity, it's a weekly activity, fortnightly, monthly. So that frequency we need to capture here to understand that at what frequency this particular thing is happening in the organization. Then what testing is there? All the mentioned process for vendor selection is properly implemented. So basically what we are trying to test here, that whatever has been mentioned in the control, whether all those activities and sub activities are happening for vendor selection or not, that we will do through testing. Then here we have come out with certain gaps which we identified, that before selecting the vendor, the following should be ensured: request for proposal, geographical area, standing in the market. So these aspects were
Roshanji,
missing.
we
Yes.
are having one more query from Janmajya. Please explain how can auditors ensure that all significant risks have corresponding controls?
No, see, it is definitely based on the experience of the auditor,
Yeah,
that
yeah.
if there is a significant risk, then definitely if there is any corresponding control, we will have to assess whether that control is appropriate or not. Let's take an example. The example which we took some time back of unlisted equity shares which we have invested in. So those unlisted equity shares, we find that comprise of the significant portion of the investments, unlisted equity shares. Now, we will definitely consider it as a significant risk because there is no quoted price of that particular share in the market. So how do we address that risk? What is the control the organization is exercising to address this risk? So what they will say, we are obtaining valuation reports for each of these unlisted equity shares. They are saying that we are doing impairment testing year on year for these unlisted equity shares. So these are the kind of controls which organization may be exercising to address this risk. Now, as auditor, it's our judgment to see whether the controls which have been implemented by the organization are adequate or not, or inadequate, right? So that we need to ensure. So if an auditor is experienced enough to understand what is adequate, what is not adequate, he will be able to do it.
It
Maybe
seems
at your level,
students
yeah.
are enjoying this topic a lot and we are receiving queries also. Yeah.
Yeah, I'm quite happy
And
that
Meera is
they are
asking, if we
asking.
don't quantify risk in calculating audit risk, what are we multiplying in IR? Multiplied by CR multiplied by DR means our formula: inherent risk, control risk, and detection risk. If we multiply all together. So she means
Yeah.
to ask, if we don't quantify risk in calculating audit risk, what are we multiplying in IR, CR, and DR?
No, see, that is a degree of risk which we are multiplying. Like, say for example, the total of all the risk will be 1, right? What does it mean? Say for example, in that 1, point 3 we have allocated to inherent risk based on our assessment of the inherent risk which are there in the entity, right? So we have scored it point 0.3. Maybe control risks we have assessed and which we have seen that okay, control risk is also quite high and we have scored it point 0.4. Then what is left for the detection risk? That is 1 minus point 0.4 minus point 0.3. That what is remaining is point 0.3. So what does it mean? That we have to devise our audit procedures to an extent that we can rely on controls to only that extent what we have scored to, and accordingly we have to ensure that my detection risk does not go beyond point 0.3. I'll have to ensure. So ultimately it is just for understanding that it is a summation of all three risk. If say for example, take another example, inherent risk, say for example we have identified as point 2, but control risk we have identified as point 2 again, that we can, then what happens? Inherent risk is low, control risk is low, and that is the reason why we are having an assurance at detection level. This detection risk will be point 0.6. So what does it mean? That we don't need to bring our detection risk to a significant level because controls are robust in this case. So this is nothing but a summation of all the risk. This is just to show that how we can understand the structure of the risk. That's it.
So,
Yeah.
Anil is asking, auditors are escaping with negligent sampling with the advantage of true and fair view. This is a great advantage spoiling corporate world. I think students are more
See,
curious and they are asking regular queries.
I'll tell you very frankly, if an auditor is complying with the literature what has been issued by ICAI, he cannot do a bad job. But if he is not complying with the standards on auditing and other aspects of it, then he is definitely not doing a good job. Same goes with other professions also. They are good doctors, they are bad doctors. So similarly, they are good auditors, they are bad auditors. And what makes a good auditor is compliance with the guidance which is being issued by ICAI. It is as simple as that. Guidance issued by ICAI and other regulatory requirements which they have to fulfill. That's it. Keep it very simple. They are good auditors, they are bad auditors. What you are saying is that is for bad auditor, but there are a lot of good auditors also in the market, right? So there are a lot of companies in India and globally, but not in every company you get to see that there is a fraud which has been identified.
Yeah, even Anil, I
You
can
know,
visualize your interest, but today we have to cover a topic, and this is endless topic, I
okay,
think.
we will
Yeah.
address other queries at once. Otherwise, at
Yeah,
the
yeah.
end of
Now I
it,
think better we should cover that part,
yeah,
and at the end we will take the queries.
yeah. Okay.
That will be, I think, a better,
Because
so that we are through with our
if I
topic.
take
Yeah,
10 hours of session, then also it will not be sufficient. But
definitely. No
yeah, because
issues.
you
We will
keep on
take the
asking
queries
questions.
at the end only. You please continue.
Okay. So similarly, once vendor selection is done, then we come to price fixation or revision if it is required. So here the control objective is, so similar is the process. Here control objective is to ensure prices are fixed or revised after requisite approvals. So it should be authorized, whatever price has been fixed. Here also we have identified the assertions which are associated with this control objective. And whether it is a fraud risk factor, yes, again, what is the risk in it? Unapproved price fixation, so it is not authorized. The revision is not authorized. Here, risk rating is high. What is the entity control? Entities control is in two parts. One is for raw materials and one is for consumables and civil. Two different processes are being followed, which are addressing this issue as per the entity. Key control, all these things remain same. Here, do we have any observation? Yes, the management should not be dependent so much on a particular person for procurement of materials. So basically, in this particular case, what is happening? They are relying on a particular vendor significantly. So our suggestion is they can look for other avenues also to bring down the degree of risk. So now coming to the third leg, which is vendor ledger creation or modification. Similar is the case to ensure that all relevant details of a vendor is captured in Tally system and they are updated on a regular basis. So vendor data, master data should be updated timely. And here, fictitious vendor creation is a risk leading to fictitious purchase or unauthorized purchase booking. Here, and what entity control is there? So they are obtaining all the KYC documents of the vendor. They are doing all the credibility check of the vendor. So whatever activities they are ensuring, they are doing to ensure that vendor is not a fictitious vendor. So those activities they have documented here. Here again, we have an observation that a single person must be responsible for ledger creation of vendors in Tally so as to avoid creation of multiple ledgers. So what we identified there, that for the same party, multiple ledgers were created. So this was a kind of gap which we could identify, right? Similarly, the next one, creation of purchase order. Now purchase order has been created and the control objective is to ensure all purchase orders issued are processed accurately and completely. Similarly, the assertions, fraud risk factor, yes. COSO component, there are three components which are associated with this control. And unauthorized purchase is the risk which we have identified here. What is the entity's control? That PO is being approved by the concerned reviewer. And what testing has been done here? That purchase order in case of raw material is properly formed and documented. This we have ensured through testing. What is the observation which we have here? For purchase of civil items, entities should invite quotations from at least 3 vendors. For regular items, they are inviting 3 quotations, but for civil items, they are not obtaining 3 quotations, which is being followed by regular items. And comparative quotation analysis should be prepared, which I discussed some time back, that they create one comparative quotation analysis, thereby they identify the best vendor. So this is, so similarly, if you go one by one, then if modification of purchase order is required, what we need to see? Then if any unattended PO is there, say some PO has been issued, but against that no material has been supplied. So definitely that poses a significant risk, because if there is any open PO and no one is attending to it, what may happen? We are in inflationary conditions. Maybe if that PO remains open for say 6 months, after 6 months the price of those goods would not remain same, right? And there is a possibility that if that PO is open, even though a material is not required, we may purchase that material against that PO, even though that material is not required. So we can purchase that material. So unnecessarily we will be overstocking goods which may not be liquidated in near term, and we will be blocking our working capital as well. Advance payment to vendor. So definitely the terms of the contract needs to be seen whether advance payment were required to be made or not, right? Unauthorized advance payment may be made, and there might be a possibility when we are making the final payment, advance payment adjustment has not been done. Then bill booking process comes into picture, that we have received the invoice, received the goods. Now bill booking has to be done in the books of accounts, and post that payment has to be processed. And all these things needs to be documented. This is again a sub process. Vendor payment is being made. This is the sub process. What is the risk? Payment is being made to fictitious vendor. Payment is being made to a party to which that payment belong to. So all those are risks, and correspondingly there may be controls. If any debit note has to be raised, as I discussed some time back, that may be on account of quality also, on account of quantity also. And finally comes the vendor reconciliation and balance confirmation, that an entity may have a process that on a quarterly basis or a half yearly or an annually basis, we will obtain vendor ledgers and balance confirmation to reconcile with our books of accounts and see if any unreconciled items are there or not. If any of those items are there, we will resolve then and there to ensure that it does not get spilled over to next year. Okay, so this is a typical P2P RCM which we discussed. Whatever findings were there in that RCM, that has been documented here. This is one document which is covering all the observation. If you refer to this, we will go through the observations, and for each observation we definitely tell them about the implication, and also we provide recommendations to them. If you just have a look at the observations, the first observation talks about the SOP for P2P process has been prepared. However, it is yet to be circulated to the process owners, and it has not been signed by the management. Next observation we have is the current RCM risk control matrix for procure to pay process has 12 risk areas identified. But as we discussed yesterday, we need to ensure completeness of risks also. So we could identify 6 missing risks here. That there are 6 risks which you have not covered as part of your risk control matrix. Next observation is there is no departmental budget system in place, so that you need to have. Then indents must be created for all material purchases made within the organization. So what in their organization, what was happening, for all items indent were not being raised. But what we suggested is, if you are following a policy, you have to follow it consistently. Then next is, it has been observed that the stock which is filled in the indent are updated manually. So if any, since the indent was being raised through a document software, so ideally the quantity has to be filled in through system only, but many a times it was seen that they were updating that manually. So it again is a control lacuna. Now next is, it has been observed that during the period April to June, 97 instances indents were raised but no corresponding goods have been received. So certain indents were raised but correspondingly goods were not received. So what does it portray? It portrays that even though certain goods were not required, but still those were ordered. So who has issued those indents needs to be brought to books. Fields missing in document software. So in the at software level also, we could identify certain gaps which we discussed with the management, that you should have these fields in the document software as well, like who has approved the indent, stock quantity at stores at the time of indent, what is the item code, what are the cancelled indents and its remarks, why it has been cancelled, and who is the approver of the PO. These things should be there in the document software, which we are missing. Currently, invoices are not tagged against POs, making it difficult to track whether PO is still open or it is to be closed. Similarly, as per RCM, thorough vendor understanding must be conducted by verifying the vendor profile and by proper market research. On the basis of our samples, so we have tested certain samples, and it has been observed that out of 5 samples selected, vendor profile has not been received for 4 vendors. So what does it portray? It portrays that their control over receipt of vendor profile is not adequate. And it has been observed that while purchase orders are required to be created only after indent is raised by the user, in 63 cases, the indents were raised subsequent to the creation of purchase orders. So what has happened here? We have issued the purchase order and subsequently indent is being raised. So this is a significant lacuna that they are not following the process, right? Similarly, yesterday also we discussed that we are testing one sample end to end. This particular, what we mean by information produced by entity, for what attributes we check it. Yesterday we had discussed it in detail, so I'm not going to this document again. In the last session we had discussed it in detail, so I'm not going through it once again. I'm going to the next document now. So this is the design and implementation testing through which we are testing the controls. So here what we have done, one sample only we have selected. The name of the user is Planning and Geology Department. Item name is there. 3 quantities were received. Requisition was approved on 28th May 2015. Departmental head has approved the requisition. Requisition approved date was 28/5. It was requisition was approved by stores in charge as well. Final approval was accorded to on 29/5/2015. They prepare note sheet for justification why this material is required. So that note sheet is prepared or not? Yes, that has been prepared, and this is its reference number. What is the designation and name of the person approving the final level? So deputy manager mechanical stores, senior manager materials, manager G&E, manager finance, and manager geology. These people have approved this requisition. And then whether annual rate contract is there? No annual rate contract. This is one-time purchase. Type of bidder is a single bidder. PO issued to authorized dealer of Konica Minolta, since this particular product was to be bought from an original equipment manufacturer, which is Konica Minolta. So I cannot take other quotations for this because this is the original equipment manufacturer, and this particular item can be bought only from the authorized dealer of Konica. So we have bought it from authorized dealer of Konica. That is the reason why there is only a single bidder. So rate as per ARC. So these things are not applicable because this is not a long-term contract. Then finally, what is the PO date? 35 is the PO date, PO number. So these are the details of PO. Indent number is there. Vendor name is there. Quantity is there. This PO has been approved by whom? At what rate this PO has been issued? Right. So against this, when we have received the goods on that date, GRN has been issued. Then inspection has been done, and then vendor challan number, vendor invoice number, transporter challan number, everything is there in place. Invoice details are there. Whether there is any difference between the invoice data and the PO data. So there is no difference. Reason for this difference is there is no difference. There is no applicability of any reason. And then invoice received by finance department. So throughout this process, what we did, we have checked the sample end to end to see whether the control which has been designed is implemented or not. To check that, we have done this testing of a sample by checking it from end to end. So this is one example how we do DNI testing. We also call it process walkthrough. Similarly, once we are comfortable with the design and implementation of controls, then we need to check the operating effectiveness of controls. So how do we do that? There is a sample size determination module which has been issued by ICAI. One reference material is there which you can refer to see how many samples to be selected in what kind of population. So here what we have done, we have tested 25 samples based on that uh, uh, recommended tool. So in this case, what we are doing, we are comfortable with the design and implementation of the control that we have tested through DNI. Now we are seeing whether this particular control is there in the organization throughout the year or not, and whether that is operating effectively or not. So here these 25 samples are spread throughout the period, throughout the year. So I have identified samples on a random basis or other scientific method I have used to identify these samples, and these samples have been checked. So whatever we saw in DNI, so similarly, we have tested that whether the PO is approved or not, whether PO is based on requisition or not. So all these all these attributes, we have tested these samples, right, for PO, GRN, invoice. So as similar to DNI, we have tested these 25 samples to check whether the controls were operating effectively throughout the period or not. Now coming to the case study. This is very simple. I will just narrate it to you for paucity of time. Here what has happened, that XYZ components. Achha, let me share this file. I think you are not able to see it. You are able to see it? See this file?
Actually, its Word file is not being.
One Word file you are
So
able to
I think
see?
you have done stop sharing, no?
Okay, okay.
Yeah, now it is visible. You
Yes,
can
yes,
zoom in.
I've shared it now.
Yeah, yeah, please.
Yeah. Okay.
Little
So
bit more.
now
Yeah.
this XYZ, yeah. Now it's okay?
But now it's perfectly okay. We can. Yeah.
Okay. So XYZ Components is a company which is a mid-sized manufacturer in aerospace industry. Aerospace industry is highly regulated. It is supplying precision engineered components to global aircraft manufacturers under long-term contracts and fixed price contracts. So what has happened here, that since prices have been fixed already and those are long-term contracts, it is not within the capacity of the company to seek increase in prices with the aircraft companies. We will not be able to command that. So definitely, if any cost increases are there, we will have to absorb it in our cost margin, in our margins itself. So in this particular case, during the current financial year, ERP system has been implemented in the organization, and replacing multiple legacy systems. Earlier, they were using other systems for procurement, inventory management, and cost accumulation and financial reporting. Now, separate software has been implemented. There is a significant change in the information system during the year. That does mean, right? Now, although production volumes and customer demand remained stable, management reports show a notable decline in gross profit margins. Because costs have increased significantly, our gross margins have shrinked. So in these conditions, as part of our audit planning, the auditor undertakes the following procedures: conducts detailed inquiries with senior management, finance personnel, and plant heads to understand changes in operations, costing practices, and system implementation impacts. So we are doing inquiries from management to the process owners to understand what changes have happened during the year in terms of operations also, and in terms of system and costing practices as well. Now, we reviewed prior period financial statements also, internal management reports also, and budgets to identify any inconsistencies or what trends were there, to understand those trends. We performed preliminary analytical procedures, noting a decline in gross margins despite unchanged production volumes, and inspects significant customer contracts, cost sheet assumptions, and all these activities we have done as auditors. Now the question is, considering the significant change in operations, which of the following best explains the primary rationale for these procedures in understanding the entity's environment? So in this particular case, the major rationale which seems to be right is to obtain to identify and assess risk of material misstatement at the financial statement and assertion level, and to provide a basis for evaluating the design of relevant internal controls. So this is the correct answer. In second case, XYZ component supplies aerospace components under long term. So all these story we already know. Which factor most significantly increases the risk of material misstatement in profitability? So what is the risk of material misstatement which is significant in this case given the scenario it is in? So here, so basically the correct answer is volatile raw material prices combined with fixed price contract. This is the significant risk which may impact even the going concern in the organization, because they cannot pass through the cost to its customers. So that is the reason this is a risk. How they are managing this risk needs to be understand from auditor's perspective. So this is it from my end. Now, if any questions are there, I can take up those questions, else we will wrap it up. So I think today I have been able to complete it on time. So
Perfectly okay. And in fact, if the topic is interesting and students are finding interest in the same and they want to know and they are curious about the practical aspect, definitely we cannot ignore their curiosity. And since this initiative has been taken to bridge the gap only, because they are just studying with the help of
yes,
study material, right, or publication. So if they are having practical flair, they will definitely be able to correlate. So no issues, sir. You can take your time. So query is, please explain, does there any practical indicator suggest that a control identified by management is not truly a key control? And one more query
okay.
from
See
Kuldeep.
again,
How? Yeah. You please answer that first.
yeah. So this is the query is that how do we understand that a control is a key control or a non-key control? So see, again, it is based on the experience of the auditor, judgment of the auditor, that if there is any risk, whether the corresponding control is able to mitigate that risk or not. Take an example that there is a foreign currency exposure in the organization, huge foreign currency exposure. What is the key control against it? They can hedge against the forex fluctuation. They can do hedging of currency hedge they can do, right? So that may be a key control, and there may be a supporting control that there is an element of natural hedging. What do we mean by natural hedging? That there are certain receivables and we have planned in such a way that on the same date we will receive certain we will have to pay certain payables also. So what will happen there comes natural hedging into picture, that on the same date we have receivables also, on the same date we have payables also in the same currency. So that is natural hedging, but that cannot be a key control. Key control will be hedging. So likewise, you will have to use your judgment, you have to use your experience to understand whether a control is a key control or a non-key control. Any other question, ma'am?
Yes. Just a
Yeah.
second. How to ensure that material or item procured is of revenue nature and not capital? If procurement is done as per authorization limit of purchase manager, then why PO need to be closed after purchase is over? So basically, the student wants to know about these three things. How
I
to
got
ensure
it.
that material item procured is of revenue nature and not capital. Second is if procurement is done as authorization limit of purchase manager. Third is why PO need to be closed after purchase is over.
Okay. So see, the first question, how do we understand whether an item is a revenue item or a capital item? So generally what happens when a company issues a PO, so then and there they mention that a particular item is a capital for a project or that item is for regular consumption. So if it is for regular consumption, it is a revenue item. If it is for a project, maybe an expansion project or a new project. So that is definitely a capital item. And otherwise also, based on the nature of the item, we should be able to understand whether this item will give us benefit more than 1 year or not, whether the benefit of this item will go on for more than 1 year or not. If that is the case, that this particular item will be giving benefit for example, we have bought one air conditioner, so definitely we will not consume it within a year. We will be using it for more than 1 year, so that is definitely a capital item. Then again, your experience needs to be used there, and understanding of the accounting requirements. So based on that, you will decide on that. Second question relating to authorization. So if a purchase manager has authorized the a particular PO or any other document for that matter, so in that case we need to see the authority matrix which is there in the organization. It's not necessary that purchase manager has been authorized to authorize the purchase order or any other document. So we need to see the authority matrix which has been approved by the management, and accordingly, based on that authority matrix, we need to see that proper authorization is there or not. If it is there, then it's okay. But it doesn't stop us from further looking into it. Authorization may be intentionally fraudulent, right? So still, as auditors, we need to see the validity and completeness of that item, whether that item is actually for the organization or not, for the benefit of the organization or not. Now coming to the third, PO closed. Why PO is closed? See, once PO has been issued for 100 quantities, when we have received 100 quantities, it has to be closed, because that PO is having authorization of only 100 quantities. Then how can we receive quantities beyond that? It has to be closed. So once material have been received against a PO, because that is the terms of the PO has been decided only for those 100 quantities. So that has to be closed. Yes, ma'am.
Yeah.
I think you
In the
responded to
given
it.
case, it also need to check if balances and rates of consumables are properly carry forward in new system. And you also want to know about volatility of price of RM.
Okay. First, volatility of price of RM. Okay. ठीक है. Okay. So the first query, consumables. So consumables or any other item, if we are moving on to another system, so we have to do that check and balance. Definitely, that is a very much part of migration process. Then we have to see that all the balances, all the items have flowed to the new system smoothly and at the right values. So that anyways is a part of the migration process that we have to ensure. Now coming to your second query, volatility in raw material prices. So definitely see, we are in a world which is highly dynamic, and raw material prices keep on varying. And definitely we cannot hold significant volumes of raw material because it involves huge outlay of working capital as well. So we have to create a balance in that we should be able to forecast the requirement of raw materials appropriately, and based on that forecast we stock the items considering the working capital also in view. So I think this query is also resolved.
Yeah. So I think we are through with our topic risk assessment and internal control evaluation. My dear students, since we have discussed regarding reschedulement of 27 June to 29 June, and as confirmed by you all, we are postponing our session, which is scheduled on 27 June to 29th June on substantive testing. Definitely, for rest of the session, schedule is as per planner, like Wednesday and Saturday, 4 to 6 p.m. And today we are through with our topic risk assessment and internal control evaluation. And next topic we are going to cover is audit evidence. And our session is scheduled on 20th June, again 4 p.m. to 6 p.m. So till now, what we have covered, dear students, preliminary engagement activities, audit strategy, audit planning and audit program, risk assessment and internal control evaluation. So my request to all of you, please cover all the standards and interlink it with the sessions which we have conducted. And thereafter, still if you find any doubt, please connect with us. You can write to us. You can use ask your query feature. You can do share your feedback, right? And we will be pleased to help you, assist you for your queries, and we can of course enhance our session plan scheduler also. And as we are moving towards end and we are having our next topic, audit evidence, on 20th June and 24th June. So total 4 hours are allocated to audit evidence part, and that is really going to be very interesting, because you all are knowing that auditor's role is to express audit opinion. And how auditor can express audit opinion? Based on sufficient and appropriate audit evidence, right? If the auditor is unable to obtain sufficient and appropriate audit evidence, then he has to think of disclaimer of opinion, again depending on materiality and pervasiveness. So that part definitely in depth we will be covering in audit report chapter, where we will be discussing conclusion part, right? So till now, my request to all of you, please study thoroughly, and we have to really bridge the gap so that not only we are able to score in auditing subject, right? We are able to understand the requirement of the question in the which is being asked in the examination, but also when we visualize that how standards will be applicable in practicality, right? So do in-depth study, prepare your notes, okay? And my sincere thanks to Roshan Bajaj ji. He has almost took you through practical aspect only. In the beginning, definitely we have to initiate with the theoretical part to share the essence of the standard which is being discussed, right? So first he mentioned about that, I think just touched upon the theoretical part and immediately rushed to the practical part and correlated each and everything, and also cleared your doubts also. So I hope you all have enjoyed the session. If you have any feedback, do share to us. It will definitely help us to improvise further. So with this, I conclude this session. Thank you. Thank you very much, Roshan ji. Thank you to the technical team. Thank you to each one of the student who has attended this session, and we wish you all the very best. Please study and interlink it with practical aspect, then only you'll be able to correlate the same, and you'll be able to perform not only in the examination in practical world, also when you are going for audit, or when the intermediate students, when they pass, so they are going for articleship. It will definitely help you all, right? With this, thank you very much. Thank you
Thank you
Roshan
so
ji. If you
much.
want to add anything,
No,
you
thank you
may
so
please
much,
add.
everyone. I'm glad to be interacting with these young people. So this is something which I am fond of, and I keep on looking for opportunities when I am able to get opportunity to interact with these people. So really, a big thank you to all, and big thank you to you for inviting me for this session. Thank you very much.
And we will again interacting with Roshan sir in our next topic, not in audit evidence, but in the further topic substantive testing. So looking forward to see you, sir, and wish you all the very best, dear students. Thank you all.
Thank you.
Yes. Thank you.